All right, and welcome back, folks, to the Shortfall Show Live. My name is David Lincoln, and we have a special guest today from the Option Insider Radio Network, Mark Longo. Welcome, Mark, to the program. I know, indeed. Let's see, when was the last time? I was probably on about 6 weeks ago, maybe, something like that. Well, that's quite an honor, and of course you're going to be slumming here on the program because you have the professional radio voice, and you always have everything plotted out so nicely. Let's see, it's saying
whatever you guys do here on the Short Vol Show / VIX Crush. That's what are you calling it these days?
It's still the Short Vol Show, although. It's a little bit of a strange title considering the rip that we've had, that we're still in business and everything.
What if I said to people to buy vol? Would you kick me off immediately? Am I out?
No. We're an equal opportunity VIX channel here, and I realized that I already messed up and didn't have your volume up for the first couple moments. I think it's working now. Let me know in chat if we can. Can you hear Mark now, folks?
I will talk very loudly. How's that?
Let's see if they can hear you. Oh, they can hear you now. Good. Okay. Well, welcome, and thanks, folks, to all the new members out there. I really appreciate it. We've gotten about 4 new members in the last couple days, and that's really awesome. It's great to have people watching. I know, have you had a lot bigger numbers these days, Mark? Because we certainly have, with everybody sitting at home.
Yeah, this has kind of been insane times for us, quite frankly. I guess if there is a silver lining for us to all this madness and mayhem that is going on in the world, it is that everyone is at home right now, A, so they have a lot of time on their hands, and B, most of them are quite concerned about what's going on in the markets and indeed in volatility. So for us being focused exclusively on that side of the space, it's been kind of banner times for us. Again, not the circumstances anyone wanted to be driving people to our door, but c'est la vie. We'll take a silver lining in all this madness wherever we can get it. So yeah, things have been extremely robust. I'm pretty sure March was a record month for us. I'll have to go back in and check the exact numbers, but yeah, it's been kind of off the charts. We've been trying to keep up with it, just keeping up with our usual schedule, adding more shows in here or there, doing a lot more Q&A these days as well on our shows, just because so many people have so many questions, which is understandable. And it seems like, I don't know, Dave, if you've gotten this question a lot too, but it seems like 95% of the people who've written into us over the past 3 weeks to a month or so want to ask one question. They say, if I buy puts or if I own puts in whatever the name is, SPY, XYZ, pick your flavor, and the exchange is shut down, what happens? That's what we've been asked that more times than I can count. Has that question been coming into you a lot lately as well?
Yeah, we've gotten a little bit of that too, and also the what happens if they stop allowing short selling? That's been a big question as well.
Yeah, that'd be kind of like a redux back in 2008 where everyone lost their minds, and they briefly had that until everyone realized this is insanity, and they walked away from the ledge. But yeah, we started to hear those stories floating around again, banning short selling, talking about actually shutting down the markets for a while. That was another thing that was floated out there, which to me, it's hard to believe any sort of professional who spent any time engaging with the markets would recommend less access to liquidity rather than more, right? It's a maddening idea, but these are the times we find ourselves in. So for everybody else in the chat who has that one question, we've talked about it many times. Maybe I'll start hitting that again, because I'm sure people are going to ask that question again in a few minutes. Obviously, if you own options, it's a better position to be in than if you're short options, because then you're kind of completely out of luck. But if you own options, remember, if you own them, you can always exercise them at any time, even if the underlying exchange is halted and exchange is shut down. So if you think you own, let's say, puts in SPY and everything's halted, and you think maybe by the time things reopen, it's going to be demonstrably lower, even if you put through all the money when everything halted, if you think it's going to open up below your strike, you can go in and exercise them. Contact your broker, act proactively. Also, go check out, it's over there, the OCC, the Auctions Clearing Corp. They put out a great guide very recently called the Unscheduled Markets Closings Guide. It walks you through all these different scenarios. So if you have this question, and clearly everyone does, check out that guide. In fact, I want to bring the folks on OCC on our network one of these days to go through that guide in detail. But yeah, that's a question everyone has these days, Dave.
Yeah, it seems like It's important to make the distinction between whether you're the underlying that you have the puts in settles to cash, or if it settles to the shares of the actual underlying.
Yes.
That would make a difference, of course, for people. It brings me back to 2000 or to September 11th, which was the time in my career where everything just kind of halted for weeks at a time.
Yeah. That was a weird one, too, because it rolled through expiration. That was not a scenario where anyone really anticipated, right? You could have had everything on correctly. And I was fortunate then. I was still market making in Intel right up until about a week before 9/11. I had moved from the SPX into Intel. And even then, I was kind of seeing the writing on the wall for floor-based market making. And I was kind of getting a little bit tired even then of kind of the back and forth between the exchanges and having to fill paper you didn't really want just so SIBO in that situation can get more market share over an Amex, something else like that. So I said, you know what? This is kind of crazy. Let me close out my position and figure out what I want to do next. So I kind of sold back and closed out all of my position about a week before 9/11, which was completely auspicious timing on my part. And it worked out well because obviously it rolled through expiration. Everyone who had front month hedges against their position went away. So it was one of those unforeseeable scenarios that now people obviously plan for. But back then, no one thought about, oh, were you still market making at the time, Dave?
Yeah, and I don't remember the part about expiration. All I remember was that I was net back spread and owned, which for non-market makers means I net owned options, and so I was a bit concerned about my theta decay over that time period. How long was it? It was close for like over a week, I think.
Yeah, it was a pretty long time.
But as it turned out, I didn't get killed on the theta decay, and I happened to be long some downside, and so I made a little bit of money on the whole thing, which was pretty embarrassing to me. I know that show Billions. The guy made his fortune during the September 11th thing, and I didn't make a fortune, but I made a little bit of money during that thing, and it was. I remember though going to the floor the day of and running away from the exchange because we thought some plane was going to crash into the. One of the big buildings around there, but it reminds me of that. Yeah.
You on the SIBO then? Were you on the Picos? Where were you then?
No, I was at the SIBO. Yeah.
Okay.
And I remember driving in, and the first plane had hit the building right before I got in the taxi, and then we were upstairs at the Group 1 office, but we went into the floor, and then pretty soon after we left the floor and just left for a couple weeks. But that was definitely a scary period of time. For us.
There were planes headed to Chicago as well. So yeah, it was a heady time out here. But yeah, that was completely fortuitous on my part and indeed on your part. It kind of shows the capricious nature of trading at the end of the day. You could do everything right and still luck can play a part in it, right? So it was inauspicious times, and that helped lure me to the dark side of content, which is what I'm doing all these years later, Dave, why we're talking together today.
Well, I try to make that point. I have a lot of new people that watch this program, and I try to make some points about trading. One of them, which is just there is this part of just luck that's involved with trading, and just there's a certain uncontrollable nature of trading, options trading, whether it be if you're a floor trader, maybe your handheld battery runs out when you're trying to put a hedge in, or your hand signal is misinterpreted by somebody, or even at home, maybe you're about to sell some options against something you just bought, and your computer blinks out, or the internet goes down, and that's something that can be hard to get used to. I think for new traders, the fact that there's a certain element of just chaos that's associated with trading that you just kind of have to accept.
It's totally true, right? You're about to click sell on a spread or whatever, and your wireless mouse dies, or look at right now, everyone's having internet problems because the whole world is on the internet, and you want to get a spread on, or maybe you have the right positions on and you happen to have a broker like Robinhood that was out during the worst part of it, right? That's no fault of your own. And yet, so you could do everything right, and that's what we encourage, have risk mitigated positions and everything else. You could do all that right. But when it comes time to take it off, right, at the apex, when you want to take it off, your broker's down. So some absurd other thing could intervene there. So as long as you're prepared mentally for that, it'll go a long way, I think, in your trading.
Yeah, I had a situation once where it was a complicated three-way spread in the pit, and I did this. It was like buy this call, sell this put, blah blah blah. I did the trade. I turned around. I sold 20,000 shares against it, and then I talked to the guy next to me, and I said, "Oh, did you sell your stock?" And he said, "No, that was a delta neutral trade, Dave. We didn't need to sell any stock." And I was like, "Uh-oh." And so I bought my stock back Stock was already, of course, higher when I bought it back and turned into a big loser. But yeah, it can also be your fault, I guess, which happens.
You don't listen to the broker. That's on you.
Yeah, exactly. So
it has been amazing to me, and maybe this is something that's interesting to and you've noticed as well, because I was very concerned when all this hit the fan, because we were just talking all these floor trading stories. You and I were floor traders back in the day. That is no longer happening right now. How crazy is this? We're in this environment where not only are we in unprecedented levels of volatility, we're hitting circuit breakers time in, time out. Not this week, but last couple of weeks, we were certainly doing that. We're seeing volatility closing at record levels, and all these things are occurring in this unprecedented scenario where, for the first time ever, SPX, a storied pit crowd that's been around since the early days of options, Eurodollars, all these things that are storied pit crowds are now entirely 100% electronic. I don't know about you, but when they first opened up that first Monday after everything shut down, CBOE, CME, MNWest, I thought, oh my God, this is going to be a disaster. There's going to be no liquidity out there. Things are going to probably crash. There's going to be crazy out trades, crazy errors. We're not going to do anywhere near as much volume as we would normally in these environments. And we haven't seen that. I mean, we've seen liquidity issues, certainly. Don't get me wrong. We can get to that in a little bit as well. But in general, the volume is still pretty robust. And we haven't seen major outages outside of, I talked about Robinhood earlier, outside of a handful of those kind of things on the broker side. We haven't seen, let's say, CBOE go down, for example. And no one knew if their systems could handle an all-entire SPX electronic. And yet they've been able to keep up with the paper flow for the most part. Have you been as surprised as I am, David, that we're not talking about, 3 exchanges down or something else crazy like that?
No, I think you're right. And it's amazing that the liquidity has been there. I think the flash crash was a good trial run for some of this stuff happening. I know that was before everything went electronic, but it did get people in the idea of like, what happens if everyone just turns off their computer? Because, when we were staying in the pit, you couldn't just walk away and everybody goes home. You had to stand there and make markets. And, the fear is that everyone's just going to turn off their computers when stuff gets bad and go home. But yeah, it's worked out okay so far. I wanted to ask you, just for people, I know a lot of people that are watching, at least from my end here, are not familiar with your programs. And I was wondering if you could just give like the 20-second overview of some different programs that you offer.
Where have they been for the last 13 plus years? No, I'm just kidding. We're getting a lot of influx of new people. That's kind of what the market is right now, right? People who never thought about options before are suddenly thinking about them, right? Or have never thought about volatility or the VIX before are suddenly thinking about them. So we love having new people come in all the time. Yeah, we're the Options Insider. We have a bunch of different networks and outlets, I should say. The website is kind of the main center for everything, but we're probably best known for our Options Insider radio network. We've been doing options podcasts since pretty much before the iPhone. We kind of got that whole ball rolling way back in. We started planning them in late 2006. We launched the first one in January of 2007. So it pretty much was. I don't know. People have asked me if it's the first ever financial podcast. I don't know about that. I'm sure there was some random thing out there before us, but certainly from an options perspective, we were the first options podcast. And now it's kind of just grown and snowballed as podcasts have become huge, as options have become huge, as volatility has become huge. It's snowballed. We have probably a dozen or so different programs we do on the network now, kind of carving up the option space in a lot of different ways. So maybe a lot of your listeners are on the basic retail side of the spectrum. So we have shows like Options Bootcamp and Options Playbook Radio and things like that are kind of catering to the very basic crowd. We have more advanced stuff like the Option Block, kind of a little bit more of the active retail. We have things like Volatility Views, which is more for you've been on, Dave, that is some of the more higher end of the volatility spectrum. We talk about VIX futures, term structure, and crazy esoteric volatility products and things like that. We do futures options every week with CME and things like that. So we try to carve up the option space in a lot of different ways. And you can find us, just type Options Insider into wherever you find your favorite podcast. We actually are. You guys like YouTube. We are on YouTube as well. It's not the way we intended to disseminate our content. It kind of just goes out in an automated style. It's all audio, but you get a nice little fun static image to watch. But a lot of people like to use YouTube to listen anyway. They don't really watch. So we're getting a lot of people coming in through YouTube as well. So if you want to go that way, have at it. Our content all goes out there as well. But the easiest place to get all of our stuff, just grab our app or go into a place like iTunes or Stitcher or Spotify, type in Options Insider, you'll see a whole bunch of shows come up. Get our main network feed to have all of the shows in it. And then I guarantee you, there's 13 years worth of content in there. So we'll keep you busy, if nothing else, with options-oriented content, sir.
Well, does it cost money for people to check it out?
Nope, completely free. We go out to the big firms. We have like the CMEs and the Nasdaqs and the Fidelities pay, so that you guys don't. So you guys get it for free. So we're nice. I figured I'd much rather go out and hit up the big firms who have the budgets. Let the traders out there, let them learn and understand and get educated on their own time and save their money for other things.
Well, I find it fascinating, and there's, I only know about my own little parts of the financial world, so I like to turn into stuff that I don't know as much about on there, and learn a little something. Because I only have my little areas that I know about stuff, but I can go on there and learn more about something like gold or even like Bitcoin, this sort of thing that I don't know as much about.
Crypto show now, yeah, it's been an education for me as well to kind of pull me into. I mean, I don't do all of our shows, obviously. I know what I want to. It's too many. But, there's a lot of different areas. Crypto is fascinating. The advisor asset manager program where we look at options and derivatives and volatility through that lens is kind of fascinating to see how they view the space and how they utilize it and how some of their large. It is amazing in this day and age, Dave. You could go out and amass hundreds of millions, if not billions of dollars in AUM and not have the slightest wherewithal out of how to even buy a put, right? It's that to me is mind-boggling in 2020. That you could do that. Yet that's the scenario we're in for a lot of these large funds out there. So, yeah, it's kind of scary. We're seeing a lot of them ride the market up and, of course, ride it right back down now, right? So, but that, of course, for guys like you and me who talk about this stuff and people who out there manage money using options, these are boom times because all of a sudden maybe somebody you called or talked to.
So we lost the feed for a second here. Hold on 1 second. Let's see.
I see you're back now.
We lost the feed for 1 second there, but we're back. Cool. Yeah.
I was just giving my 7 tips to instant profit. Everyone missed it. Oh.
And number 7, and now you're ready to go and conquer the world.
Yes, go for it. Go forth and prosper.
Yeah, no, I've found the same thing. I've been approached by fund managers, and in my position here, who don't follow options. Somebody's asking, what's the name of your YouTube channel in the chat here?
That's a good question. I don't use it, so I don't have to go. It's just Options Insider, I believe.
Yeah.
I'll have to go see. I'll have my producer send it in the chat here what it is because it's not exactly just Options Insider.
Yeah, I'll put it in. I'll put it down below.
Mr. Producer, if you can, again, I don't look at it that often because it's not our preferred outlet. But if you have it there, I'll ask right now. And then you can check it out. Yeah, so all of our shows go out that way. So if you like yourselves a little bit of the old YouTubes, and sounds like a lot of you do, then it's a small but growing audience for us. And again, it was almost accidental. We realized, our distribution platform also includes YouTube. People are actually listening to the shows there, which is kind of funny. So I guess the more platforms, and a lot of people like to listen to it via Twitter and things. The days of just going and subscribing in iTunes or a Stitcher or what have you. People like to just stream it. They can stream it directly from Twitter now. It goes out there. You can stream it directly from that. You can stream it from our website. You can stream it from a million different places. You don't have to go subscribe in the old format.
Yeah.
But general, it certainly can if you are so inclined out there.
Yeah, I usually watch it through Mixlr, actually.
That's the live stream. So if you guys are hardcore, and we do have that hardcore of the audience, the bulk of the audience likes to get it on demand on their schedule, but there are that hardcore. That few hundred hardcore folks really want to get in there and listen instantly. They don't want to wait for the edited podcast to come out. So for those folks, you're in there. You can have at it. You can ask questions. We always favor the live too. So if you're listening in live, if you have a question, we usually try to bump you up to the top over the email folks and everything else out there. But yeah, it has been a fascinating time for us. A lot of interesting stuff going on out there. I'm curious to see what's your crazy. I always joke about Mark and Andrew. Their folks are their crazies in their pitch chat. I'm curious what your crazies in your vol chat have up their sleeve there, Dave.
So yeah, let's talk about the market for a second here. And it looks like we're basically unched on the day. Actually, E-mini's down 2 right now. The Dow futures up 14, but the Nasdaq down 17. So we're basically unched across the board, which the VIX is up a little. I'm just presuming because we gave back a lot. We're kind of we went down to being unched from where we were earlier in the day. But I'm interested if you'd like to answer the question that's implied by the title of this video, which is this time to double up on TVIX for viewers. And I know everybody has a different view on this sort of thing. And please, there's Jean in the chat. So she jumped in and gave the YouTube channel. So, hey, Jean.
There she is. Yeah, a good producer is hard to find, and she is definitely a good producer. So she got in there. Didn't even send it to me. She sent it directly to you guys. That's how on the ball she is out there. But yeah, it's funny. Yeah, go by all means, stop what you're doing, go out there and double up on TVIX. I am joking, listeners, for all of you out there who are about to hit the buy button. My history with TVIX goes back a long way on our network. We've been talking about TVIX on our Volatility View show in particular for quite some time, and not usually in the most glowing of terms. Our issues with TVIX kind of began back, I forget how many years ago it was now, where they first had their little hiccup, their little issue. You may recall this, Dave, where it was not in an environment like this. It was not in an environment where, VIX was exploding towards anything like that. It was a regularly calm market. It was just an issue with their fund flows that caused the TVIX to effectively unwind. And the thing almost spiraled out of control to effectively annihilate itself. So after that, I was already a little bit dubious. I always jokingly refer to these things, this entire universe of these, VIX ETPs as Franken products, because a lot of them are, right? They're out there. There are a lot of ways for people to get kind of a poor man's option. It's a poor man's exposure to the option space. If you want to do a levered exposure to VIX and volatility, you can certainly do it yourself using the direct product itself. But a lot of people don't have the interest or the wherewithal. They're a little bit intimidated by that. So they think a product that can do a levered version of that, or a 1.5, or all the different flavors that come out there. They find that appealing, and I get that. But it's course, first off, you have to realize that there is exposure to derivatives in all these products. So if you're not understanding that, that's probably the first issue. Second is these Franken products, they're hard to manage. It's a difficult thing to be able to replicate these returns on this levered return ratio that you put in your prospectus. And so TVIX has unwound before. It got pretty dicey here right now. It rallied up intraday, got touching the 1,000 level, which is insanity. That means the AUM and TVIX went from it was like not even $1 billion at the start of the year, like 700 million up to over $6 billion at one point, which is insanity for this product. So these guys out there now who are managing this, and gals, of course, are now having to come in and manage this completely unwieldy beast that they've created. And so they're moving volatility, they're moving VIX. In fact, they're threatening the volatility spectrum with so much size that they have to do. If TVIX kept going up, it would have been a problem for a lot of people. The notion that this thing could just go up and up ad infinitum to 1 million. No, once it gets not much north of 1,000, I don't know exactly where that cutoff level is, but it was getting close to that level. And a little bit north of that, we could have seen an XIV style kind of vol apocalypse, Volmageddon going on out there, because this has been another massive product that would have had to been unwound and caused all sorts of unbalances in the vol space as a result. So we got pretty close to it, but we didn't. That's another reason why I'm not a fan of TVIX. So just for those keeping score at home, it has had multiple issues now over the last few years. Now, understandable. The other ones, maybe not so much. All due to its Franken construction of it. It's a Franken product, so it's not going to deliver to you the returns that you hope. It's going to be some weird amalgam of what you're looking for therein. If you can always do it much better, much cheaper, much more efficiently by using the options themselves. So if you want to go to VIX and play in VIX, I encourage you to play in VIX. And, the issues were it got to 1,000. It could have just completely imploded from there. And who knew? All these people who were piling into it, the last $5+ billion of AUM that it gained over the course of the last month and a half. How many of them, Dave, what percentage of them think you had any clue that could possibly happen? I'm going to wager it was sub 10%.
Yeah, just to kind of explain to people, because TVIX is 2 times leveraged, they have to rebalance it. So once it swells to a huge size, each day, if you have a down day, they've got to sell extra futures. If an up day, they've got to buy extra, and that creates not more than a ripple effect in the futures after the close and, anytime near the close. And we actually saw the futures start to really behave very strangely when TVIX was up around that level. We saw a couple closes where futures went way down right before the close and then popped right up after the close. And I think it doesn't even necessarily have to be TVIX rebalancing. It can be people anticipating a problem, piling in, trying to kind of front run the rebalance and this sort of thing. It was acting a little crazy. I have someone in the chat saying here, why is this channel only focused on TVIX and so forth? And I just want to respond to that really quickly. I've been talking about TVIX lately because we had an influx of viewers come to this channel that were long TVIX, and I kind of get it. If you're a retail person and you saw the whole market a sea of red, but you see this one thing that's up $200 and is green, then you kind of think if you're doing a basic analysis of things, you say, well, maybe I'll buy some of that as a hedge against all my red stuff. And a lot of people got into a lot of trouble just by doing that. And so we've been trying to walk people in off the ledge over the last couple of weeks in TVIX, and people learned too late actually what kind of product they were dealing with, and hopefully they get a lesson from that. In general, this channel, though, is not about TVIX. It's about volatility products. And as Mark knows, one of my big favorites is UVXY as well as VXX, but we also talk about options on the VIX. And the reason why I had the channel that way is it was just something that I could talk about online where I felt there was a void in information on YouTube. And so that's kind of how that we got to this level.
There's quality volatility information on YouTube, Dave. I don't believe it. I refuse to believe it. YouTube is usually the font of wisdom and all these types of things.
It's very competitive. So what is your what are your thoughts on the market in general and on the VIX right now? I mean, we've had a pretty big rally, and it seems like everybody in the world is kind of telling me, oh, well, it's definitely going to go back down from here. And when I see someone at the gas station come up to me and say the market's overvalued and it's going lower tomorrow, I kind of wonder. What's going on here? What's your what do you think about the last week or 2 weeks of trading?
Oh, by the way, I'm getting it. It is just Options Insider is our handle on YouTube. So if folks want it, just type Options Insider in there, all one word. And that's what I thought it was, but I wanted to make sure. So you can find it and you can subscribe. And then, of course, you can get all of those updates. All of our shows go out automated there as well. But you're right, Dave, in general, this has been, I think to call it a crazy time is underselling it a little bit here. We all lived through 2008. I lived through the dot-com madness and the 2000 and 2001 stuff out there. You did as well. And this kind of supersedes that on many different levels. If you listen to our Volatility View show, listeners, part of that show at the end is we always attempt to prognosticate what volatility is going to be for the coming week. You've been on it, Dave. It's not the easiest of segments to try to wrestle with sometimes. I've been pretty fortunate there. Like a couple weeks ago, I was exact bullseye when VIX was at about a 62. Last week, not so much. I've been fading a little bit higher. And people who are saying the VIX is going to come in, near term, of course, it had to come off that level of the 80-plus level that it was hovering at. Because, and I've said this many times, people get confused. They conflate volatility. And you can certainly get pretty complicated with your volatility math at the end of the day. But at the end of the day, the basic vol calculation is pretty simple. It's what is the realized vol in the marketplace? And whatever you're moving, that's going to translate into Y level of volatility. And it's hard to really escape that at the end of the day. And, what we were pricing in at an 80 VIX was translating into those plus 4% swings in the S&P a day, right? Days where we're triggering circuit breakers day in, day out. You can't sustain that forever. And we're seeing that now. We're still moving. And we rallied, 5% more yesterday as well. So we are still moving. Another thing people forget in the vol space, and this is called the short vol show, so maybe it's worth pointing out here. Upside movements still count as volatility. People always think downside is just volatility, but swings to the upside, also volatility. But in general, we're not moving 4+% a day yesterday notwithstanding anymore. We're not hitting circuit breakers day in, day out. We're not threatening level 2 circuit breakers anymore. So when we're coming off those extreme levels of realized volatility, it makes sense that the VIX would come in from an 80 down on to the 50 handle, maybe a little bit below. But if you listen to the Volatility View show, I haven't been feeling as much of the erosion to the downside of late. I don't see it getting much below these levels where we're at right now in the 50s to maybe mid 40s for a while until we have much more some of these structural issues have to be taking place. For example, we can't have, they have been mitigating for now, but we can't have escalating death tolls and escalating virus hotspots throughout the country and expect, volatility to continue to come in, expect a rally to come in. So these are issues that we still are complete unknowns, and we can't really model them. And so for that reason alone, we are starting to see a little bit of more movement out there in the S&P again. So for those reasons, I've been hovering around these levels a little bit higher, mid 50s, where vol has come in, But I haven't seen that next wave yet where we're off to the races. But the worst is behind us. The downside is behind us. It's just one more news cycle, one more news day. We come in tomorrow and there's a horrible escalation in New York, and oh no, there's another hot spot that has sprung up somewhere else, right? And all of a sudden the stimulus talks are talking about fall apart and all these other things, and next thing you know, we're down to the downside, testing circuit breakers to the downside again. So, we are very much poised on the edge of a delicate precipice here. And markets rallying, they're liking it. Guys like Bill Ackman are out there talking these things up. Obviously, he's long again. But outside of that, I'm not feeling all of this upside. So I've been kind of focusing on trades like that tend to stay small, stay nimble, stay pretty short term. Things are obviously still very wide out there. Despite the fact that volume is going up, things are not very liquid. Spreads are wide. The size on those spreads are pretty wide. So if you're out there trying to trade any sort of spreads or any more sophisticated strategies, you're going to have to be pretty nimble out there. I don't know about you, Dave. I've been encountering some issues getting even basic things. I like to stay in ratios at times like this, maybe on a downside, levering in to something with a ratio downside put spread and things like that. And even now, these markets, if you have more than one leg out there, it seems like you really have to babysit your stuff. Is that something you're encountering as well?
Yeah, I totally agree with you, and you're actually echoing a lot of what I've been telling people, just to kind of stay small. And a lot of times also it's deceptive, because with these options trades and stocks, they'll let you in easy enough, but it's when you try to close out your position that all of a sudden there's no liquidity. And so you don't be deceived and think, I was able to get in, okay, because you can get stuck trying to get out of things. Okay, so there's a question in chat for it says, anybody know why the VIX contract expiration dates are different than all the other ETFs and stocks?
I'm assuming they mean outside of the traditional, SPX on a Thursday and equity options on a Friday.
Yeah, I think so, yeah.
That's kind of the early construction of it. They wanted it on that Wednesday cycle. It kind of lines up with the futures a little bit better there. But you're right. That's another thing people don't think about when they first get into VIX for the first time. They don't think about that it's a kind of a non-standard expiration cycle from that perspective as well. They're used to things going out on a Friday, and maybe if they have to, having a little bit of a window on Saturday to be able to exercise stuff. VIX, you don't have that. You have these crazy settlements. I'm not sure if you've talked about that as well on the show here, David. We've talked about in vol views a lot. And the notion of VIX settlement brings up the notion that if you are trading VIX options out there, it'd be futures as well, but if you're trading the options, which is where we focus, I don't know about you, Dave. I always counsel people just close out stuff going into settlement if at all possible, because the VIX settlement process, not only is it on an obscure day where if you're not ready for it, it's going to come up out of nowhere. You're thinking it's a Friday, and next thing you know, your options have settled and you're out. But the other thing is the settlement process, I think the technical term is it's wonky. It's kind of subject to a lot of the vagaries and whims of the marketplace. There's been all sorts of illusions of carpet bombing, people buying out of the money puts, attempting to manipulate it. We saw Cboe get hit with a bunch of lawsuits of that over the last couple of years. So there are a lot of other factors at work in that settlement process which are completely out of your control. So if you have a position that's gone your way, or even if it hasn't, going into settlement, just take that off. It's a complete crapshoot at that point going into the settlement. So not only is it an obscure day, but also you have an obscure process that is difficult for a lot of retail in particular to come to grips with. And so just in general, a safe, just general rule of thumb, I'd say for all trading, not just retail, but definitely retail as well, is if you have something on the VIX, it went your way. If it didn't, close it out before that crazy settlement process takes hold. And then the dice are rolling, and it's all up to the whims of the volatility gods, Dave, as to where your position settles out.
Well, this is a good teachable moment here, because just to explain to people that are new to this stuff, if you're trading options on a VXX or a UVXY, the expiration, which actually occurs a week from now, we're coming toward the end of the cycle this time around, but the expiration for a VXX or UVXY is not going to affect you nearly as much as if you're trading options on the actual VIX symbol being hedged with the futures, because it's pretty much moot for UVXY or VXX, because the way those are composed of an average of the futures, and the the percentage of it that has to do with that expiring future is zero. And so if you're in a UVXY or a VXX, you don't have to worry about expiration as much because we're all in the next month's future by then, and we're running off the May next week. But if you're trading options on the VIX, I would suggest the same thing as Mark said. Just close it out, move on to the next thing, because there's no way it can act very strange, as we noticed last year. There's been lawsuits about it, and it can act very strange on that last day. And more, it's morning when it expires, that morning. And it's best to just not mess with that. But if you're in VXX or UVXY, they're already on to the next month, and so it's not going to affect you. You can watch it go crazy and think to yourself, I'm not in that product.
Yes, VXX, that's a whole other ball of wax. Before we get to that really quickly, my go-to guy for all things contract specs is always my buddy, the Flow Master, Mr. Henry Schwartz over there trading. He actually is listening to our live chat right now, and he has a good point, which is totally good about the listener who asked earlier about why it is Wednesday. It is because indeed it lines up better with the SPX expiration out there as well. Remember, VIX is a 30-day forward look at volatility, and the basic math: 30 days, 4 weeks plus 2 days. That's how you get it lines up with how it goes out on a Wednesday. So to line up with SPX 30 days before SPX expiration. That's why it has to be those extra 2 days.
I did not know that. Wow.
So he's always my go-to guy for the weird little nuances of contract specs. So he's good for that sort of thing. But you mentioned VXX. That's another one that's a fun one of late. A lot of you, I know you're the short vol show. That's usually, we don't get as much of the TVIX on our network. Usually we get the folks looking to VXX to fade it. You guys get a lot of VXX folks out there champing at the bit to fade vol these days, Dave?
We've got a certain amount of that, but we've definitely been dominated by TVIX people and people that are just starting to learn about it. My core audience, though, is well familiar with my my general recommendations in VXX, which, just to reiterate once again, would be if you're going to fade volatility, my idea on that is to go out in time. Give yourself plenty of time for this situation to unwind itself, because we don't know what's going to happen next week, or even someone as smart as Mark doesn't know what's going to happen to the VIX tomorrow. But
I didn't tell you before the show. Oh yeah, I have that locked in already. I'm sorry. That's part of my that's after hour special. We're going to talk about that later.
That's you have to pay for that service. But yeah, so my advice generally is, if you're going to play to the short side, pick something a little bit farther out in time and go with that. So what about people who are have these sort of retirement portfolio type situations where they talk about sort of a buy and hold situation where they have a 401k, it's in the stock market, maybe they got out of some of it on the way down, or maybe they've been in cash for a while. Do you have people asking you about, is it time to get back in the market, and how do you respond to that question?
We get a lot of that. We get a lot of that in various varieties. Not always is it just should I get back in the S&P, but also on the vol side, right? Should I be diving in at vol, long or short on these levels? We usually get it through that lens rather than just the broad market. We get the broad market a little bit as well out there. Those people scare me for a couple of reasons, because they're the retirement money. So usually they're a little bit longer term, which is fine. That's a good outlook for, if you want to buy and hold the S&P, for example. But vol products, as you know, Dave, particularly these Franken products, don't work that way. So a lot of them, they're not going to play directly in the VIX options or the VIX futures or things like that. They're going to go out to one of these Franken ETPs, like a TVIX or, an SVXY or one of these other things out there, or a VXX. God forbid it's VXX, but and they're going to buy it. They're going to think, this is now my exposure to volatility, right? I've bought VXX because I think VIX is going to go up, and I'm going to put this in my IRA, and I'm going to set it and forget it. I'm going to come back to it a year from now, and oh man, I'm going to be so good because vol is going up, right? And for all these products, Dave kind of just touched on it earlier, but again, I call them Franken products for a reason out here, is that they have these all sorts of elaborate constructions to enable them to achieve these returns that they're marketing to you out there, the 2x, the 1.5, x, whatever the return is that they're trumpeting to you out there. They have to do some legwork to make that happen. Often that involves rebalancing. You talked about VXX earlier in the rebalancing coming in at 2 weeks. So a product like VXX, if you're just buying and holding that underlying, now you get 2 weeks towards the expiration cycle. VXX has to go out and rebalance its futures. It's attempting to approximate, that VIX futures position. And that's why I always say go directly to the source. If you want to get exposure, do the options on that future or the future itself, because then you don't have to deal with all these issues. The VXX has to rebalance. And now it becomes a strategy question of what is the proper way to rebalance. And there's tons of literature, tons of research, and tons of different funds do it tons of different ways. VXX makes it easy. They just do it after 2 weeks before expiration. But the result of that is, look at where the VIX futures are right now. They're what's called backward. That front future, extremely expensive compared to the second month future and so on and so forth out down the curve there. So what you have is a scenario where effectively these funds are rebalancing. So they're going to turn around and just get walloped by this negative roll yield out there. On products like VXX, you could get up to 15-20% a month, if not more, of just eroding. If vol stays still, you're just eroding at these levels. And these are the things that when these long-term buy and hold people come in and ask about buying volatility products in the long, that's when I usually get a little bit nervous. Now, to their credit, a lot of these products, VXX, the XVXYs, UVXYs, all these other ones out there, TVIX as well, they will now put in their prospectus, hey, this is a product that's supposed to be short duration. In fact, I was just checking on it. I don't check prospectuses that often, but I was looking at some of these before the show just to see what they do say right now. And UVXY, to their credit, say this is for short-term use. Investors should actively manage and monitor their investments as frequently as daily. So they even put that in there now. They say you should adjust this daily. And it also says it does not track the performance of the VIX and can be expected to perform very differently than the VIX. So they put all those caveat emptors in there in the prospectus. But to their credit, they do say that. Now it's buried on page 27 of a 400-page prospectus. But that said, they at least are mentioning that now. So these are products, if you're going to trade them, you need to be on top of them. You need to be watching them daily. It's not a set it and forget it. Luckily, Dave, people have the time now to do this kind of stuff, which is encouraging. But in general, when they come to me with that kind of stuff, that's usually my first talking point is, okay, what is your use case? Are you looking to set it and forget it? Or do you have the time and indeed the wherewithal to kind of babysit this kind of thing? And even then, when they're coming into VXX, let's say they're a little bit more savvy. Let's say they're coming into a show like ours, like a Volatility Views, and they know VXX has that roll yield issue. And so as a result, they're going to hope this thing just erodes back down to zero. VXX popped up to about 70, I believe, not too long ago. And so folks are like, okay, that's when they were salivating, right? They were coming to us saying, we got to get in this VXX. It's going to erode. But they weren't paying attention to other basic elements of what goes on, which is, of course, the Greeks, Dave. They weren't paying attention to the fact that VXX and most other vol products, when volatility is high, these products are moving. They are now very volatile. In fact, we had a listener write in. I'm going to share this with your audience, Dave, because I think it's very emblematic of, the caution I give to everybody out there in products like VXX right now. Where is this? I won't give their name, but I said it on our Vol Review show. But he wrote in asking, this is probably about a week, maybe 2 ago, and he says the VXX June 30 put, so these were still several months out. At the time he was looking at the quotes, were $1.37 at 3.30 on his brokerage platform, and I won't say which one that was. So already you got a terrible spread there, a $2 wide spread, effectively, which is just atrocious. He says, so what the hell am I supposed to do with these? I can't buy them and I can't sell them. He says, in case you're wondering, that's 148% of volatility. And he was completely right. That was the scenario. People who were coming in and just, let's say in that scenario, you lifted that offer, right? You paid $3.30 for these VXX June 30 puts. So you were hoping in your heart of hearts, VXX is going to get annihilated and it's going to go back down below the 30 strike by June expiration. Well, guess what? That you got a good move in VXX in your exact direction. And VXX is not 70 anymore. It's come way down. It's in the 40s now. And so you had a nice move in your direction. And guess where these puts are trading, Dave? They're still trading about $2. Yeah. So if you sold these things, you couldn't get them off for probably much better than $2. If you bought them, you paid $3. So the vol has come in. They're still pretty volatile. It's about 100% implied vol out there right now, but it was about 150%, not a little bit higher. So when the vol is that high, if you're just straight up coming in and buying these products, even if you get the underlying move that you wanted, and they got this, it's still a scenario where if you sold it it didn't work out because you sold it probably around $2 and it was trading $3 and change when we checked it a week after this question came in. And the underlying had already moved $10 in its favor. So you lost money if you sold it. You lost money if you bought it. It's one of these just completely dangerous scenarios out there, which is why we were telling people, unless you're pretty savvy out there in VXX land, you might want to keep your powder dry. If you're going to do that, you can't just straight up buy things, right? You have to have some sort of short premium leg against it, probably on a ratio. I'm not one. You're like me, Dave. You came from a market making background. We had it hammered into our head very early on not to get short units. But in a scenario like this, where if you can identify a level where you're okay getting long some VXX, then maybe a ratio put spread certainly would have been better than what this guy was looking at, right? Buying just puts for 330. And it doesn't matter what scenario happens, that trade is pretty much guaranteed to lose money. So if you have some other short premium legs against it, 1-to-1, maybe 2-to-1, if you don't go crazy and go 5-to-1 or something like that, but have a couple of ratio leg against it, and if you identified a leg for that or a level of that short leg where you're okay getting long VXX, and you could do a little bit of work there. So when the vol comes in, you have now a ratio of 2 legs that are coming in versus 1 that's eroding. So hopefully that'll help you out in that long term. But yeah, Dave, that's why these markets are so challenging right now and so dangerous, because they're still wide, they're still highly volatile, even though they have come off a little bit. You could come in, you could do your analysis. This guy said, you know what, it's pretty reasonable that VXX will be back below 30 by June expiration. It was just below 20 not too long ago. It was down to 13, 12 and change. So that's not that unreasonable of an estimate. Yet if he lifted the offer on this crazy wide market, he still got run over. So that's why we say to people, you have to be pretty judicious in what you're doing out here with these products. Even ones like VXX, where you could have the right analysis and everything else. If you're not cognizant of the level of vol, if you didn't go look at this and say, wow, I'm paying 150% volatility, how does that line up compared to the historical volatility out here? If you didn't do that basic bit of math, you wouldn't have realized that you are paying through the nose for this thing, and maybe it's better to get the heck out of Dodge.
Yeah, I've had people with very similar scenarios to the one that you described there. I had somebody with sort of the opposite scenario where they were long puts in, I think, VXX, and VXX was up several dollars one day, and they said, why are my puts going up in value? And I said, sell them right now and get out of them, because you were given a little reprieve right there, and that's a message from the trading guides to get out of your puts right now, because...
Yes. It's funny because usually that question comes in. We get that question a lot, but usually it's the other way. Usually it's people come to us and they say, I paid XYZ amount for this call in some crazy name. Could be Apple, could be a biotech, whatever the hell it is. Usually it's before earnings, right? They paid some enormous amount of money for an upside call. The event happens, could be an earnings call, whatever it is. The stock moves a little bit in their direction, and then they end up losing, 20% on the call. And that's when they contact us and they say, how is this possible? The stock went up in my call. That's the flip side of the exact same thing that's going on in VXX right now. If you're not cognizant, and other products as well, if you're not cognizant of the vol levels that you're trading, and at these crazy high levels, you have to have at least one short leg to offset that. And if you're not comfortable doing that, then there's no shame in keeping your powder dry in times like this. If you're completely overwhelmed, if you can't make heads or tails of these markets, there's no shame in that. Just in making sure if you are trading, you're staying small. Hopefully this guy if he ended up trading these, he did it pretty small, because otherwise he got run over pretty badly. And that's VXX. That's an optionable one. That's another reason why I don't like TVIX. You can't use the options. Yeah. I don't know if you know, Dave, but it says Options Insider here on my shirt. I'm not allowed to trade things that aren't optionable, sir.
Yeah, my rule of thumb, which my viewers will know, but just to let you know, with like getting long TVIX or actually just buying shares of any of these products, is I tell people, I never do it. If you got to do it, don't stay long for more than 48 hours. If you got to pick a point where you you got the call, Blue Horseshoe says that the market's going to crash tomorrow, and you jump in there, then if it doesn't work in 48 hours, bail out. But these are not things to put in your portfolio and check. Well, let's put it in our portfolio and we'll check back in 6 weeks and we can talk about it. It's not the kind of product. Yeah. And that's,
we have people hitting us up on that. And, I even have family members contacting me saying, what about some of these Franken ETPs and the S&P, right? Like SDS and others, right? And my advice is similar to all of them. If you're going to do these, know what the limitations of them are. Know that they could unwind at kind of any moment. Stay small in them. And exactly, don't trade them. Don't hold them for more than 24 hours. In fact, it should be really one trading session and you're in and you're out. That's kind of it. If you go beyond that, you're really kind of getting beyond the bounds of what these products were designed for. So yeah, if you're going to hold any of these Franken levered ETPs, it could be a TVIX, it could be one of these, could be SDS, could be whatever these ones are you're looking at. Even getting out there and things like USO, maybe a little bit safer in USO these days, but still because it's so cheap. But you have all these levered Franken crazy things that are attempting to replicate a futures position, usually doing a pretty crappy job of it, and are suffering terribly from roll yield at the same time. If you're going to trade those things, make sure it's extremely short term and that you're at your screens ready to close it out if it moves against you, because chances are that it will.
Yeah, we saw there were problems with dust, I know, and I heard horror stories about people being long the TQQs on margin. So we're running out of time, but I do have a question from somebody in the chat that maybe you could give a shot at just for somebody here before we wrap it up here. They said to us, could you explain contango, please? You want to give that one a shot?
Contango is what you normally have in most of your futures type products, where you look at it and you're going to have your healthy futures curve. Could be a VIX futures curve, could be oil. Most of these products you're looking at, they have a futures curve. You expect things to have a higher price the longer you go out, hence that normal upward sloping futures curve. So contango effectively means your price as you go farther out in time is going to be higher for a variety of reasons. Could be cost of carry, could be a lot of storage in the case of a physical commodity, things like that. All these things factor in cost of capital as well. All these things factor in over time to cause that what is typically known as contango. It's a crazy term. I know these terms in the futures world, backward contango, they're nuts. Don't blame me. I didn't come up with them. But that's what you're looking at in a normal, quote unquote, healthy futures curve. You're normally going to see that in a product like VIX as well. You're normally going to see the cash and that front future down at the bottom and a nice, usually healthy drift to the farther out you go for a variety of those reasons we were just talking about before. What we're in right now is kind of the polar opposite of that. It's called backwardation, which means the front portion of that curve, the very near duration volatility or the very near duration future doesn't have to be a volatility product, could be any future you're looking at. The near duration curve is going to be much more expensive. And we're seeing that right now. Looking at, let's see, the VIX was about, where are we right here? Well, we had 30, by the way, coming into last week, we had 30 consecutive sessions of backwardation. That's the longest we've seen in the VIX futures since back in 2008. Looking at this earlier, it was over 4 handles from the front portion, that front contract in VIX out to the second portion. It got much wider and much larger, obviously, before March rolled off the board out there. So in general, those are kind of the two different flavors of structure you're normally going to encounter in a typical futures market. It doesn't matter what the future is you're looking at, but we like to use vol because this is the short vol show after all. In general, backwardation means that front portion, so the nearer duration volatility is going to be crazier, much more expensive, and then it's going to be kind of come off a little bit as you get down, and usually might get a little bit more expensive again towards the end. Might have a little bit of a weird shape in there. But in general, the front portion is going to be more expensive. Contango, the back portion's more expensive. I think the latter portion is more easy for people to wrap their heads around. The notion of the front volatility future being higher, near-term volatility right now being higher than the future. That's a little bit of something that takes a hard time for people to wrap their heads around sometime at the end of the day. And it's also something that exacerbates the trading in a lot of these Franken ETPs out there. They're not used to trading in these environments of extreme persistent backwardation. Even got me saying it now. Backwardation like we've had for the past month and change out there. So that's another reason why, if you're not familiar with things like backwardation and contango and how they may impact a product like TVIX or a product like VXX or all these other ones out there, then it probably would behoove you to step back from those products for a little bit until all this madness subsides. And it's a good reason to tune into a show like the Short Vol Show so guys like Dave can educate you on all these fun topics. Right, Dave?
Yes, and I pulled up a chart of the VIX term structure while you were talking. So if you look, Mr. Dimension 7, who asked the question, he says, thanks for your answer on that one. But if you look, you can see April here and then May, and you can just see the price of April is higher than the price of the May future. And that the futures are sloping down as you go out in town. That's what defines contango, like Mark said. It's as simple as that. And right now, the fact that April's higher than May means we're in backwardation. We're either in backwardation or contango, or we're totally flat. which, you're almost never totally flat. And as Mark correctly said, we are top 3 of all time days, consecutive days in backwardation. I think we're in the 40s in days right now. We passed up the number 3 slot last week, and I think it's 2011 is the next stop. I think is the longest one was 2011. I think it was like next is 2009, and then 2011 was 75 days. But yeah, so these are basic concepts you want to learn about before you jump into a TVIX or a VXX. So if you're confused, a little bit confused, then maybe we've done our job to prepare you to research a little bit more before you jump into these products. All right, so which show should I go and check out next? Now that I watch Volatility Views all the time, what do you think my next show should be on the Options Insider Network to check out?
Well, the option block talks a lot about volatility. We get into VIX a lot there as well. That's more for a lot of the active retail audience out there. So in that case, that probably for listeners of this show, that'd probably be a fun one. That's twice a week. You guys like the live every Monday and Thursday, noon Central, 1 p.m. Eastern. If things like contango and backwardation are your flavor of the week, you like talking futures term structures, This Week in Futures Options is on Thursday as well. That's at 1:30. We do that with CME and FTSE Russell and some other fun firms out there. We talk about all sorts of stuff like that. Backwardation, contango, what's going on in volatility. Things like crude oil, pretty volatile right now. Gold, some of the other products out there that are pretty active, the rates, things like that. So we break a lot of that down live on that program as well. If you're newer to the world of options, you want to kind of get your feet wet, like I mentioned at the top of the show, Options Bootcamp, a great starting point. Going to be bringing that one back in, I think, pretty soon. That one's pretty popular, even though it's kind of on hiatus right now. It's still the archives. People are devouring that archive. You can start at episode 1 of that and just go all the way through at your leisure, and you get through all the episodes. I forgot what number we're on now. If you get towards the end of that feed, you'll know a lot about options. Same thing with Options Playbook Radio. They have over 300 episodes of that. And that's just, again, straight up educational content. Also a lot of actionable ideas you guys can get listening to that show, talking about whatever. I think recently they were talking about straddles and USO, which would sound insane, but that's the market we're in right now, where a long straddle and USO could actually pay off. And so crazy things like that. So those are the ones I would encourage you if you're on the more beginner end of the spectrum. Options Playbook Radio, Options Bootcamp. If you're more listening to Dave, a little bit more advanced, Volatility Views is clearly a no-brainer. But then that's every Friday, 1 p.m. Central, 2 p.m. East. We got to push it back a little bit. We got all these crazy Australians joining us now, Dave.
Oh, really?
They don't wake up till it's 5 o'clock in the morning as it is for them over there. So we try to make it a little bit easier for them to join us. We push that one back a little bit. But that one, and then of course maybe Option Block is another good one for you guys. And again, just subscribe to our whole feed. It will all come through there. The interviews that we do, the advisors option, TWIFO, all that good stuff. A lot of cool stuff popping off. Crypto rundown out there. If you want to talk crypto derivatives and crypto volatility, we got you covered. Maybe there's rumors. Maybe we'll be bringing back our tech show sometime soon. So all sorts of fun stuff lurking on the horizon. We keep you busy at the very least here on the old network.
Unfortunately, we're running out of time. I mean, I could talk to you forever. We haven't talked even about gold and oil and all these other aspects of the market, bonds. I mean, there's all kinds of stuff. And, like I like to stress to people, though, you don't need to learn about every single thing in the market. If you can just become an expert in some little spot and learn to do that little spot really well, that's all you need to be successful in this marketplace. So I want to thank Mark for coming on. It's definitely an honor to have you on here, and I hope you forgive me for not having as a regimented and professional show as you, but yeah, I really appreciate you coming slumming with us for a little while, and thank you for your time.
For famous Dave of Benny Hill fame. I love that icon, sir.
I know it's not PC, but I love Benny Hill.
I grew up with Benny Hill. He was the best.
Nice. And thanks to all the viewers for watching. Thanks to Edward for your help, and Gene, of course, and everybody else for watching. And we will see you with another special guest tomorrow on the Short Vol Show Live, same time. And please do check out Options Insider Radio. Go and subscribe to the Options Insider YouTube channel right away. It's just a click. Doesn't cost you anything. And check out Mark's stuff, because especially if you want to check out the earnings cycles coming up, there's stuff going on. Go check it out. And thanks again, Mark, and we'll see you all next time on the Short Vol Show Live.
Great. Happy to do it.
Cheerio.